In this video, I'll go over Work Together Problem 6-2 from page 185 of your Century 21 Accounting Textbook, the Advanced Edition. Okay, so it is on estimating the amount of uncollectible accounts expense and journalizing the adjusting entry. Okay, so we have parts 1 through 3 on the first tab here, and then we have a cash receipts journal on our second tab. First thing we do is we look at Lycum Inc. Had net sales of $642,453.29 during the current year, ended on December 31st. It estimates that the amount of uncollectible accounts expense is equal to 0.8% of net sales. So record the adjusting entry for uncollectible accounts expense until December 31st. That will be our first part here. So again, it's December 31st of whatever year it is, right? And we forgot something pretty critical. We'll just paste that down there. This is an adjusting entry. So we always, when we have adjusting entries, we post that title here. We generally should center it. Same thing with closing entries. It just kind of provides some separation. So uncollectible accounts expense will be our debit. Our credit will be allowance for uncollectible accounts. Okay? There won't be a document number for this. It's, it's an adjusting entry. It's different. But our debit will be a formula equals 642,453.29. And then times 0.8% is 0.008. So we can go ahead and make that into dollars. You could do a round function on it if you really wanted to make sure that you didn't get all the rest of those decimal places to use, down the line, but we don't care that much for today. 5139.63 is the answer for the amount of uncollectible accounts expense we're going to plan for. Okay? So now part 2, aging of accounts receivable for Rollins Inc. as of December 31st of the current year, and estimate the percentages of uncollectible accounts by age group are presented in the working papers. That's here. Calculate the estimated balance for allowance for uncollectible accounts. Record the adjusting entry for the uncollectible accounts expense. And the balance for uncollectible accounts on December 31st before adjusting entries are recorded is a 148.68 debit. Okay, so that's normally a credit balance. So that tells us that it's going to be I think it's going to be counted as a negative number. Okay, so that one's a little different. All right, so now we need to figure out our uncollectible amounts. It's just your amount times the percentage that they guess is going to be uncollectible. Note, if it's current, like if it's due soon but it's not quite yet, only 3% of those are going to be considered uncollectible. However, that percentage goes up the later it is. So this business thinks that if it's over 90 days due already, that 50% of those, or like half of those accounts, are going to be uncollectible. That's pretty normal that it's tiered that way. And I just drug that formula down because, every one of these can just multiply those two amounts by each other. Okay, so now we're going to use a sum and just add them up. All right, so we need to estimate the addition to allowance for uncollectible accounts. What I'm going to do is I'm going to just remove that minus. But know that usually you would subtract away what the balance is if it was already a credit, but since this one's a debit balance, we've got to add them. Okay, so we need $4,042.96. The answer key says 97 because it rounded. It's fine. It's right. Okay, so then you have to journalize this entry. So again, we're doing an adjusting entry. So we'll go ahead and put that up there and then center it just like we would to make it look nice. In our December the 31st of whatever year it is, adjusting entry for uncollectible accounts expense and a credit of allowance for uncollectible accounts. And that is just this number. Okay. Again, this is an adjusting entry, so we don't need our document number. So part 2, we're finished. Now we're going to do part 3. Journalize the following transactions completed during the current year. The first one, January 6th, we wrote off Marcia Ayers' past due account as uncollectible. $621.23, memorandum number 225. So we're here in our general journal. And January the 6th of whatever year. And we are going to reduce allowance for uncollectible accounts. And we're going to reduce accounts receivable because a credit to accounts receivable will reduce it. Marcia Ayers. Okay, it did give us a memorandum number 225. And the amount was $621.23. $621.23. Okay. However, on April the 14th, we received cash in full payment of her account previously written off as uncollectible. So now we get to reopen it just a few short months later, April the 14th. And this is accounts receivable, Marcia Ayers, right? We'll debit it now to reopen that. And then we will credit allowance for uncollectible accounts, which we had debited here in the previous transaction. This time it's memorandum 259 and same amount. We just reversed our original transaction to reopen the account. Now we'll head over to our cash receipts journal since we received cash in full payment, right? So the date was, oh, here we go, April the 14th. We'll just go like that. And the account title, we'll need to write in there Marcia Ayers. Our document number, what is the receipt number? 630. And this will be an accounts receivable credit. And again, $621.23 was the amount. And then also in your cash debit. Okay, so that is all there is to estimating uncollectible accounts expense, journalizing those entries, and then just doing a couple of transactions, right? All right, so this was your work together, and your on your own is in a separate workbook. Good luck.